Nadine, welcome and thank you for sitting down with me to share your story. And of course, welcome to KPMG's new US headquarters here in New York at 2 Manhattan West. Nadine, I've interviewed a number of CFOs and CEOs this year, but this one's different. And let me explain why. I've known you for almost 15 years. We are, of course, friends. You are the CEO and co-founder of Zenzic Capital. I've given you advice, you've given me advice, and of course, you're now part of the KPMG family and a client of the firm. Welcome.
Thank you so much for having me, and what a spectacular building that you have arrived in here. The view is absolutely amazing from behind us. So,
spectacular.
Yeah, it feels very special to be here with you.
In your words and through your eyes, how would you describe and how do you view Zenzic Capital?
I mean, Zenzic Capital was a business that was a bit of a brainchild of Tom Lloyd-Jones, and Tom is the co-founder of Zenzic with me. And very early on, 13 years ago when we founded the firm, we had a vision where we wanted to become a well-recognised investment manager. And we saw quite early on the gaps in the market available to us, which was really focused on that lower mid-market across the UK and Europe. And I think, we've worked tirelessly. It's been a complete journey for us to get to where we are now. If you think about where we started, we didn't have an investment track record. We couldn't just go out and raise capital. We had to think about how on earth we were going to achieve it. We had to create our own track record. And so the journey of building a balance sheet business first, we were an advisory boutique focused on liquid credit opportunities, where we had the emergence of the UK and European non-bank lending market. And, that was post-GFC. At that time, very opaque market. People couldn't access it. And both Tom and I had the ability to access it and advise in that space and create deal opportunity. And so from our perspective, that was our clear route to becoming an investment manager, was build our own balance sheet, invest our balance sheet, and then, try and make that journey towards institutional capital by going out and raising capital once we had that track record.
And it's been a wonderful story, and congratulations once again on the launch of your new fund, which we'll come on to. Nadine, I'll never forget, it was over the summer, earlier this year, I received a phone call from you. I was at dinner with another client, and it must have been 3 a.m., maybe even 4 a.m. UK time.
Yeah.
And you had called me to let me know that you had launched the fund, of course, backed by funds managed by GCM Grosvenor. I mean, what did that feel like?
And it was an amazing moment for us, because I think you obviously go through stages as you're building a business where you hope that you're going to achieve something great, but you don't know whether or not you're going to be able to deliver and execute on your plan. And we certainly, over those 13 years, have had some highs and lows in building the firm.
Walk us through, what's it like right now, fundraising in 2025?
Yeah. So 2025 for us has obviously been a successful year. Started with the GCM Grosvenor relationship, obviously, that we've just talked about, that we closed in the summer. And that was a 2-year journey. When I decided that I felt we were ready to raise institutional capital, I looked at a variety of different routes to achieving that. As an emerging manager, I knew it was going to be tough. In fact, a number of people said near on impossible. We should maybe look at things like continuation vehicles, because we had transactions that we could put into a new vehicle from the start. Maybe more strategic relationships, whereby perhaps it was more like an SMA and we were more of an origination platform for somebody else's capital. But Tom and I were very determined. We've always wanted our own LP base. We wanted our own fund. We had a very strong vision for the growth of the firm to scale the strategy and the business as a whole. And so I wanted to try and find a group that would allow us to achieve that. And very early on to that decision to move toward institutional capital, actually I met a lady at a female networking drinks in London. And for everybody that goes to work and then knows that they've got a drinks in the evening and they're looking at their diary going, God, I could really do without those drinks. Sure. My point to those people are go
to the drinks.
Yeah, go to the drinks. Yeah.
Not for the drinks, but
go to the drinks. Yeah. And I think because, you obviously make your own luck, and in part you have to be there to create those opportunities for yourself. And so She was somebody who was stood next to me at a wine tasting. We talked a bit about the market and what we were both doing in our roles. She was working for GCM Grosvenor in London on the capital raising side for GCM. I spoke about our strategy and what we were looking to achieve, and she very kindly, post that drinks evening, sent my details to the GCM team in America.
I do want to ask you about the relationship with GCM Grosvenor. I've heard you previously described that relationship as one that clicked.
Yeah.
What did you mean by that?
There was a real mutual understanding right from the start about what we wanted to achieve in the market within Europe for the lower mid-market. And GCM understood that for us to really be able to take advantage of all the things that are available to us in terms of deal types, transactional types, we needed to be in an evergreen fund structure. And that fund now is called the Zenzic Real Estate Credit Opportunities Fund.